So in this video, we are going to be talking about Aurora's debt. Is Aurora's debt a big problem right now? I honestly don't think so, but I guess I will be discussing why I don't think so in this video. So the simple math right now looks extremely concerning for Aurora stock. Aurora closed its first quarter with $240 million of cash and cash equivalents, restricted cash, and marketable securities. CFO Glenn Ibbott said on the company's Q1 conference that the capital expenditure for the rest of the year would total $228 million CAD. Martin wrote December 11th. In other words, Aurora right now barely has enough cash to fund its capital projects for the next 3 quarters. Okay, what capital projects are they funding right now? Aurora Nordic, according to this article, they disabled 2 of their constructions, which saved them about $200 million of cash in the near term. So they currently, I guess the only project that Aurora really has right now is the building a facility in Portugal and the building a facility in Germany, which the construction started almost a year ago, so it should have been mostly paid off, and they're just finishing up the project. So at the moment, I don't really think Aurora has any current construction projects up and running at the moment. And Aurora is this title says it. Aurora believes that the existing assets are significant to meet current demand at a low cost per gram. The company expects to have flexible to ramp up projects as global demand dictates. So they're not flexibility, so they're not going to ramp it up unless they need it and until they have more cash. So in late November, the company also retired $227 million of the $230 million of 5% unsecured convertible debentures. So they freed up some debt, so they freed up some interest payment, so they don't have to worry about their mortgage payments. And they currently, Aurora has continues to evaluate multiple sources of capital and currently have access to undrawn, so they still have $360 million of credit facility with a syndicate of banks, in addition to $400 million at the market equity distribution program. I don't understand what this $400 million at the market distribution program means, but more money, I guess. I have no idea. Now we look closely at Aurora's earnings. As we can see, they have right here, they said they have about $197 million, and then they also have some marketable securities, which is an additional $39 million, which would make it, $220 million of cash. And then if we look at the debt, they have loans and borrowings as $256 million. So they owe banks $256 million. They also have a convertible debenture of $264 million. And on top of here, another $248 million. So this kind of makes no sense to me. That should have been higher. But now we go to note 12 and note 13. Let's go to note 12 and note 13. So note 12. So as you can see, they retired the March 9th, 2020 convertible debenture that was supposed to be converted at $13.05, but it was basically converted at a huge discount to the people who bought the debenture. The company also has additional $345 million of convertible secure note due on February 28, 2024, that bears an interest of 5.5% per annum. See, this is kind of weird. This should be on the balance sheet of $460 million of convertible debenture, but it wasn't. So it's a little bit weird. so I don't really get why it's not on their balance sheet. But they owe $460 million Canadian from the convertible debenture. And then we scroll down, further down, they have about $228 million of loans and borrowings. So that's not too bad. But then there's something that is kind of concerning down here regarding under the amended credit facility, the company required to have a total fund debt to adjust shareholder equity that does not exceed 0.25 to 1 prior to September 30th, 2020. Effectively, September 30th, 2020, the company must have a minimum fixed charge ratio of not less than 1 of 25 to 1 senior fund debt to earning before interest. So I don't really understand this. I'm not a financial advisor. I mean, I really don't understand like the whole debt situation. But if you guys want to explain it to me in the comments below, I would be grateful. But it to me, it doesn't look too bad. You know, it's just like right now, it's 500 million. It should be a little bit more than 500 million. It should be like more like $700 million of including the convertible debentures. But it says right here only $500 million, which is kind of weird to me. Makes no sense. But if somebody wants to explain it in the comments below, I would love to hear that. Aurora stock right now is valued at $2.7 billion, $2.50. At the end of the day, I don't know where the stock price is going, but I think, it could go down further. I think at $2 would be, the lower it goes, the higher return on investment if Aurora actually succeed at their business strategy. But right now it does look, hazy, a little bit hazy. But my bet is once legalization of Europe, Germany or one of the major countries in Europe becomes legal, and Aurora can ship product directly from their facilities all the way to Europe. I think Aurora stock is going to explode to the upside. That's my opinion. And if Aurora's debt was really a problem, why doesn't Kronos just buy them out? Because Kronos clearly has enough cash. They have about $2 billion of cash with short-term investment. Kron could just come in, buy Aurora out at dirt cheap prices, and then use their cash on their balance sheet to pay off the debt and get Aurora to just invest more money into Kronos. I think that would solve Aurora's debt problem, right? That's my opinion. And then Kron's income revenue would just increase dramatically from 12 million to like 100 million plus or more. So I don't, and much better gross margins, because right now their gross profit sucks. Holy crap, a negative $19 million. I don't know what went wrong here, but Aurora has the best gross margins in the entire industry right now. The only thing is they're lacking a little bit of cash. If they can get a big investment from someone, I think Aurora could be the #1 company in Canada, and but I don't know if they will. We'll see. Molson Coolers, just to kill off some time, Molson Coolers, if we look at Molson Coolers' balance sheet, it looks real bad. They have $410 million of cash, and they have a total of $8 billion of cash. Why doesn't analysts come out and say, Molson was going to go bankrupt in the future? I mean, yeah, they make decent money. They did lose $400 million last quarter, but 151.76, $38 million from the prior quarter. So, they're making decent money, but my argument is once MJ becomes fully legal in the US, alcohol business could start to decline in a negative way. I think Molson should like cut their balance sheet and invest heavily into the MJ sector, but that's my opinion. Anyways, thanks for watching, guys. I hope you enjoyed this content. Give me a thumbs up, it helps my channel grow. Subscribe for future updates, and have a great day. Bye.